This week, we have an exclusive interview with Deloitte, an HBAR-backed ETF update, a new way of looking at Layer 1 valuations, an all-new shark bites, Dosa, and much more. Welcome back. I'm Brandon, the HBAR Bull, here once again to bring you the latest in the Hedera ecosystem. But as always, none of this is financial advice. Use it for entertainment or educational purposes only. So the first thing we're going to start off with is some big news that came out of the Security and Exchange Commission this week. To give some background, in July, the CBOE, NASDAQ, and the New York Stock Exchange filed rule change proposals with the SEC to establish clearer and more objective listing standards for crypto ETFs and accelerate their approval to address the bottleneck in individually token-backed and basketed or indexed exchange-traded products. Currently, there are over 90 applications outstanding. The exchanges propose 3 fast-track criteria any given token could meet to be eligible. First, the asset trades on a market that's an inter-market surveillance group member. Second, the asset underlies a futures contract that's been tradable on a designated contract market for at least 6 months with adequate surveillance sharing. And finally, for ETFs that initially list, at least 40% of the fund's net asset value is tied to the underlying commodity or token, and the fund trades on a national securities exchange. Well, what happened this week is the Securities and Exchange Commission approved these fast-track criteria. Mike Novogratz's company, Galaxy Digital, evaluated the top 100 tokens, besides Bitcoin and Ethereum, which of course already have ETFs, against those criteria and found that about 10 tokens already satisfy them. Those tokens are Doge, Litecoin, Link, Stellar, AVAX, SHIB, Polkadot, Solana, HBAR, and Bitcoin Cash. Then there's a couple others, XRP and Cardano, that are coming close due to futures market seasoning. In addition, there are some quantitative metrics under discussion, including thresholds for trading volume, liquidity, market cap, market spreads, custody, and infrastructure readiness. Some are suggesting metrics like a $500 million market cap and 50 million average daily trading volume over 6 months as additional requirements. Legislative efforts like the Digital Asset Market Clarity Act are also in play. If passed, legislation like that could formalize many of these standards, clarify oversight between the SEC and CFTC, and define when tokens are considered sufficiently decentralized to shift regulatory treatment. So again, the HBAR is on a very short list of tokens that's checking all the boxes to qualify for a potential ETF. And as I've been discussing, there could be a huge impact from those ETFs when they're listed, and that's expected over just the next few months. The next thing I want to dive into is around looking at the valuations of these Layer 1 networks. And anybody who's been watching me for a while, I've been paying an awful lot of attention to revenue. And I might have been making the same mistake that I was a couple decades ago when I misunderstood growth stocks in general. And I watched, Tesla and how that evolved. And by the time I got to about a decade ago, 2014, 2015, I pretty much fully understood how growth stocks worked and how they should be valued. For example, I remember some pundits coming on and talking about Tesla and how their revenue compared to Ford and GM was so small and the valuation was crazy. At the time, I knew that was the wrong way to look at Tesla. And I might have been making the same mistake with Layer 1 networks, just looking at revenue or considering that as the most important metric. Now, I was watching Raoul Pal's show, and he and James Coates were talking specifically about this and the valuation and how we should value Layer 1. So let's take a look at a quick clip.
So let's first talk about Layer 1s. And you and I have kicked this around for a long time. I don't believe that revenue accrued to the chain itself is the key metric. And it confuses people. How are you thinking about this now?
It is an important metric because it shores up the security of the chain. But at the same time, the trend is lower transaction costs. So if you look at revenue as a share of settlement value, that is going to continue to decline. I think it's an important thing to understand. But there's probably better ways to synthesize fees in more of a relative valuation metric, like fees relative to some other aspect that defines value on the chain. That's probably more relevant than just looking at it in a gross or a sort of a nominal basis. I've started to really dig into a little bit more around some of the valuation frameworks. And you were like one of the guys who came out early with sort of the Metcalfe's Law framework, which was modeled on settlement values and daily active addresses. And no doubt that there's that just models price. A lot of the things though in crypto model price because, the metrics that we use are the dollar-based metric or defined in the price of the actual token. So if the token increases, so does that metric. And it's very hard to disentangle how much of it leads one another or what leads. It's the ongoing issue with crypto in that, how do you value these? Where is the predictive value in all these on-chain metrics? And I think this jury's still out. But if you look at things like settlement values, right? The set, which is part of your Metcalfe's Law framework, that doesn't get talked about enough, which is how much value is actually moving across these networks, how much of it is stablecoin orientated, how much of it is just peer-to-peer transfers.
Because if not, you're kind of measuring the activity of the economy based on the fees that the banks make or something, or the telco providers. Right. And that doesn't make sense, right? Because on top of the telco infrastructure or the internet infrastructure is all of the value that comes on top. And if you don't capture that, then you're not capturing the actual value of the network itself and what you can use it for.
Now, when talking about valuing layer one networks and their tokens like HBAR, focusing on total value represented, total value transferred plays perfectly into Hedera's strategy around RWAs. We've been seeing a lot of green shoots. Last week, we were talking about Swarm making traditional assets DeFi ready. There's the Kenyan Digital Exchange, which I'm really excited about. We have Red Swan out there. We're tokenizing diamonds. A lot of different things are looking good on this front. But the one that probably has me most excited, because Hedera is head and shoulders above the rest, is around the refi space and carbon credits. Now, going back to the point made by Raul and Jamie, Hedera could end up transferring hundreds of billions of dollars worth of carbon credits, both in TradFi and with the help of Swarm in DeFi as well. And to show the lead Hedera has in this vertical, 2 weeks ago, we did an interview with PwC on what they're doing in the space with Hedera. We've talked about the collaboration with the largest carbon credit registry in the world, Vera. We know that KPMG India is utilizing the network, not to mention that carbon credit bank that's being supported by the Indian government. And today we have an interview checking off the third of the big four in Deloitte. Today, I'm excited to have both Kim and Sebastian from Deloitte Web3 to talk about something that they're building on Hedera that has me really excited. I'm looking forward to the conversation. Sebastian, Kim, thank you so much for hopping on.
Thank you, Brandon. Thank you for having us here. We really look forward to discuss with you today the environmental and social impact platform.
Absolutely. So, Kim, to kick this off, can you just tell us about the platform that you're building on top of the Hedera network?
Yes, of course. So what we have built the last couple of months is an environmental and social impact platform. And essentially what it means is that we have built different components for digital measurement, reporting, and verification, in short, DMRV, to verify sustainability claims. And that's really in the broadest sense. So that's also why it's called environmental and social impact, because we want to verify the different kind of elements on the environmental side, but also on the social impact side. But we started with the environmental side because there's a lot of methodologies and measurement possibilities at that side. And we have our own mangrove projects at the Dutch Caribbean. So that was a perfect test case to start with for this platform.
Well, I certainly want to dive into that in particular, but are you already seeing demand for this type of product? And if so, from what kind of businesses?
Yeah, so Sebastian and I had maybe over 100 conversations last year with all different kind of parties. So from developers in the fields to investment companies and everything in between, also with insurers. And yes, there's a lot of questioning around this, and mainly on the high quality and accuracy of data with regards to carbon credits. So we see a lot of carbon credits out there, but mainly you cannot go back to the source and also not get all the information that's available from the different measurements, for example. So that's really what we want to bring together here and to upgrade the quality standards. So yes, there is a lot of questioning, but also, it's like we're very at the beginning, I would say, still with this topic, because a lot of companies still need to figure out what their sustainability strategy is, what they want to do with biodiversity, with nature-based projects. And once that is there, then we can proceed also with like those data and quality standards.
Makes perfect sense. Now, Sebastian, I'm going to kick this one over to you. Why did you choose to build on top of Hedera? Why was Hedera the right network for you?
That's an excellent question. And at Deloitte, we don't take these decisions easily. I think it's very important on when we do something like this, that we choose the right network. And there's a couple of factors that played here. So for one, enterprise adoption. I think the council of Hedera is a great representation of the industry, also for the clients that we operate on. So when we found out that they had very specific software development kit and a platform for sustainability claims, in combination with the low carbon footprint transactions, a couple of other things, that made us consider this essentially, which got us to this point, to be honest. And also the development community is a big plus. I think that really helps. So from a Guardian perspective, that's mostly no code, some coding we do to fine tune some details. And it was a bit of a learning curve, but the community really helped us. So I think that's a big plus. And overall, a great ecosystem of organizations and people that have the same sustainability goals in mind is just a great environment to be in.
Couldn't agree more. Kim, let's make this a little bit more real for the viewers. Can you tell us about that mangrove project?
Yeah, sure. I can show you as well. So as Deloitte in the Netherlands, we work together with our branch in the Dutch Caribbean, specifically in Curaçao. And that's where we started a mangrove reforestation project together with different partners. So local partners that can help us also with the planting. And of course, they have the most knowledge, but also with Wageningen University, who knows a lot about the mangrove tree specifically. And as you can see here as well, the HBAR Foundation. And of course, that's mainly for what Sebastian discussed about the technology and how to use it, and how also bring that further in that ecosystem with knowledge on sustainability. And what we did is really taking this platform into the field. So we went to the site, and you can see that here. So this is at Curaçao, where we have planted the mangroves. And what we did is really field measurements. So we've been with the tablets with the AC platform on it in the field to do the measurements and to record it directly. So what you see, what's happening mainly is that you record this on paper, what you're measuring. And then, of course, you have the possibility that you lose the paper, or that it gets dirty or wet, or that you change the numbers you type in later in the computer, for example. And now you type it in directly. And also you can make, of course, a picture. You can add your geolocation. So there's a lot of other sources to add around your measurement, and also to trace it back in a later stage. And we did that together with Wageningen. So here you see the Wageningen students who are having the tablet in their hands and doing on-site the measurements. And after the measurements in the field are done, they bring it to the lab. And in the lab, you will do the calculations on the specific elements of the carbon sequestration. And that's also built in the application. So from doing the measurements in the field till all the calculations in the application. And that is also where Guardian and Hedera really helped us on streamlining that, and that it's built in and also connected to on-chain data, etc. So that's really valuable, because after that you can generate a carbon credit out of it, and then you can put it into a registry. But until that moment, I think it's really an good verifiable way to track back the source of your carbon claim.
So, Kim, the next question that I have is, it sounds like you're focused mainly right now on the creation, on the provenance of the data that's being created. And then, of course, once you've created that carbon credit, it can go into the marketplace. Are you looking at anything else or expanding into anything else in that refi space that your clients might be interested in?
Yes, we are. So, but that's mainly before you're doing these measurements or that you have a nature-based project, because what we experienced is that it's very hard to bring the financing part together with the nature projects. So there's a lot of money available in the market to invest, but they don't seem to seek the right projects to invest in. or they find it high risk, because also in this specific case with mangroves, it takes a few years before the mangrove is growing and that you see your return on investment with regards to the claim of carbon credits. So what we are currently working on also on a global scale at Deloitte is to figure out if we can generate a de-risking framework. And that means that we seek for different elements that we can de-risk for an investor, that the investor feels more comfortable with his or her investment. So I think that is really helpful because, you need to have these projects, right? You need to connect the developer with the investor. And once you're there, then you will come to this end with using the DMRV platform and having this higher accuracy. But we need to get there first. And that's what we're working on now. So that's more, I would say, the step one. And there's also a lot for demand for, because clients are really like, where to invest in? Can I trust this? What kind of factors do I need to take into account? Can it be insured? All those kind of questions. And that's what we, with our global network, want to combine and bring together in this kind of framework, where it will help them to make the right decisions and also to hopefully get more investors in nature-based projects.
Well, that's exactly what we want to see. Well covered. So, Sebastian, when we talk about this product, when do you think it's actually going to be coming to market? And what are your expectations around adoption and scale?
So the platform that we've developed is actually ready to be deployed. So what you've seen on the pictures and the best dashboard that we've made, we mainly tested on our own project that Kim touched upon to do the ground truthing part and the analysis. So we combined those because our hypothesis was that that would work in the way that we figured it would work. But we needed to test that in the field to make sure, and together with amazing partners like Wageningen University, to make sure that our design actually fit the methodology used to create a claim or a carbon credit. So that was essential to do so. Based on those findings, we refined it, and as is, it is ready to be deployed. But what we see in the market is that depending on the type of investor and the type of project developer, different methodologies will be required for specific context. So that's also why it's great to work with a community like Hedera and with Guardian, because most of the methodologies that are developed are open source. So we can reuse that or contribute to those open source methodologies. Yeah, and it's also on expanding these services on the things that Kim just mentioned. I think the de-risking service that we will provide will make sure that if we record any de-risking framework evidence or anything like that on a platform like this, only further bolsters the trust that the investors will get in these types of projects, increasing funds and investments going into these areas. And I think that's very important. So short answer to your question is it's ready to be deployed, and we're waiting for the right circumstances to make that happen. So we're using it for our own project, but we want to make sure and take our steps very carefully when we do so for our clients, as we did for ourselves.
Well, I'm really getting excited about this space because I had a conversation with Hanya. You probably know Hanya from the Hedera Foundation, and a gentleman from Swarm who is already taking securities, stocks, and making them DeFi ready. So, of course, these carbon credits are going to be traded in traditional type exchanges where they have been in the past, but I think they're also going to be coming over and getting into DeFi eventually, but we'll see what happens there over the long run. You guys have done a great job so far getting into the details here, but is there anything else that you'd like to cover? Kim, I'll go to you first.
No, I'm just really excited to bring this further because I do believe that despite the current geopolitical situation and the focus on sustainability, it will come, right? And people will see the urgency, because that's also what we notice in our conversations. And I really look forward to bring this further, to bring it live, and to help different kinds of parties in this ecosystem to make the right decisions and to get the quality at a higher standard. So that we can all benefit from that.
Well, we're looking forward to it as well. Sebastian, do you have anything else you'd like to cover?
I'm very grateful for Hedera and what they've brought us in terms of the connection that we made, all the conversations, the many conversations we had with all the people surrounding these types of projects really helped us really get a grasp and understanding of what's happening in the space, but also recognize trends and be able to tailor to this. I think that really helped us get to the point that we're at right now.
Well, we certainly appreciate you coming on today. We love the fact that you've chose Hedera. Thank you for building on the network, and good luck.
Thank you.
Thank you, Brandon.
So with entities like PwC and Deloitte not just embracing the Hedera refi infrastructure, but creating it themselves and presenting it to their clients, like I mentioned, we could literally see hundreds of billions of dollars worth of these carbon credits trading on the Hedera network. And using the valuation metric that Jamie and Raul were talking about, that could have a really big impact on the Hedera network as a whole, but in particular, the HBAR. And while we're talking about the Hedera refi ecosystem, there's been one token that's already publicly trading, and that's DOVU, that has been absolutely catching fire this year. DOVU has done nearly a 20x over the past year. DOVU, the company, is active across the refi space and most recently announced their DOVU OS platform, which gives you an idea of how the DOVU token can be used. The DOVU OS is a platform that supports sustainable project management. The innovative system is designed to streamline complex sustainability tasks, reducing operational costs and simplifying processes. Working invisibly in the background to support any client, the DOVU token is the transactional medium of exchange for DOVU OS and their broader suite of products, providing predictable, low-cost transactions anchored in US dollar value. Proving out the platform, they provided a real-world case study where they produced carbon credits for end-of-life recycling again in India. In addition to the fee structure for the DOVU token, there is a governance component as well as incentive structures, including an innovative staking mechanism and bonuses for actions like purchasing carbon credits on their platform. Now, there seems to be continual excitement around everything that DOVU is doing and, of course, the token itself, but there was some confusion around some things that were happening with the token and Coinbase last week that I wanted to clear up. And actually, Brady gave the best explanation of this. So I'm going to show a quick clip from this past week's DeFi Corner. We want to cover something that has certainly gotten a lot of attention this week, and that is DOVU and something that's going on, not necessarily with Coinbase, but on their DEXs right now. And it's not just DOVU, but it's Gilmore Estates, I believe, as well. Can you give us some background as to exactly what's happening here and the dynamic we're seeing that has people so excited?
Yeah, I've seen some posts on Reddit and X and a few other places, mentioning the visibility of DOVU as like a tradable asset. Like when you go to Coinbase, you can look up prices for assets, and it's often that it'll say, oh, this asset isn't tradable on Coinbase, but it'll still list the price. That's the case with, Saucerswap and Bonzo, for example. But for DOVU, it does list it as, hey, this is something that's tradable. And when you start to dig into that and what that is, there's a lot of questions by folks of like, oh, does that mean it's tradable on Coinbase's centralized exchange? Is it something different? The way that Coinbase operates is foundationally, when you look at their S1 when they IPO'd, one of the risks that they cited as, to their main revenue driver, which was their centralized exchange business, was the proliferation of decentralized exchanges. And since their IPO, it's been many years now, and the introduction of the base network, layer 2 network, I think what we've started to see is them attempting to ensure that they don't get disrupted by decentralized exchanges. And what that ends up looking like is the listing of assets that are available on base in decentralized exchanges being pushed to the Coinbase platform and visible up front and saying, hey, this is a tradable asset. The way that was able to happen with DOVU, my understanding is that they do have DOVU bridged to other networks. So Base is one of those networks. In doing so, liquidity pools being established. I believe it's on Uniswap, but it might be Aerodrome. And with that, being able to trade DOVU through a DEX on Base. And so that gets exposed in the Coinbase app. Coinbase, their whole thing is using their centralized exchange business as a distribution model for getting users on chain. If you go check out like Jesse Pollock's X, doing as absolutely much as possible to try and get users on chain. He's doing like on the what is it, man in the street interviews of
Sure.
asking people to do that, which is pretty cool. So it just seems like that's sort of a natural progression for them. And with that, because DOVU is available again on base indexes, makes that surfaced and available for users to check out. So I think that's great. I think having assets that are like, their home is Hedera being available on other networks is a great thing. I also hope to see HBAR have that case as well. Folks should be able to go to Uniswap on Arbitrum or Avalanche or Base and purchase HBAR, a wrapped version of it, maybe using layer 0. So I'm sure we'll see that, in the coming months.
Makes sense. And DOVU, of course, is a fantastic asset. It's a great company. They're doing great things in that refi space, talking about getting exposure to that carbon credit space. It's a great way to do that because that's where they're working. The token has done phenomenally. Of course, it did well when this news came out. And this is really innovative by Coinbase to have things like this. But this is just the latest leg. I think it's done a 10x from the bottom. So DOVU has certainly been one of our shining stars to this point. Now, I was mistaken there. The returns from the lows have been even more impressive for the DOVU token. And of course, this is not financial advice, but if you do want exposure to the Hedera refi space, having a discussion with your financial advisor around the DOVU token might be worth your time. Now, I haven't had Rob on in the past couple of weeks, but we did get him back for Shark Bites this week, so let's check it out. Rob, it's been a little bit, but welcome back. We appreciate you giving us some time today.
Hey, Brandon. Yeah, it's only been a couple of weeks, I think, but it seems like a long time. I was in Dallas last week with the Hashgraph team. Very excited about what they're doing. The roadmap. They have a HashCon every year, which is a kind of company offsite, but they ran it with DevCon as well. So all the engineers, running through roadmaps and hips and an unconference style kind of ideation. It was great energy. I mean, really, really good energy, and great to see all of the people that I've interacted with over the years in person. So that was good.
That's great to hear. So a lot of things have changed in your world. Like you mentioned, you traveled halfway across the world. Check that out.
We did Dallas style team building with proper cowboy hats, which is cool.
There you go. I love to see it. Well, you've also taken on a new role, and that's why you were there in Dallas. Can you tell us a little bit about it?
I might leave that hat for future. Yes. So. By the time it's been alluded to, right, in the socials. There's a new team that I've been asked to create. We're going to go into a lot more detail in the table talk, the council table talk, which should be out next week. So I won't, go into that level of detail today. But the blog that's been posted today talks about what we're going to do, as Mance said in your interview with him a couple of weeks ago, and in my responses to that when we last spoke, there's a new function that is being set up that I'm leading called HEAT. So it's the Hedera Enterprise Adoption Team. It can be thought of as a professional services for Hedera. So, sort of like a Big Four consulting approach, but specific to council members and getting council members into production. So the lighthouse projects that Mance talks about, that final mile that is so difficult to get from proof of concept to production, that's where we focus, right? And for every single council member, that we will be able to support their projects as long as the intent is to move into production. It's co-funded and it builds value for the network and for the member. And it's not a big team. It's a team of one at the moment, or it will be as soon as I start. But the purpose really is to, the ecosystem has great resources, right? So not just the ecosystem partners, the foundation and THA and the Hedera LLC and Hashgraph and ESF, of course. but also the wider ecosystem. And my role really is to find the right resources from within those partners to bring together for a short period to focus on each council member project. We'll start slow. There's lots of low-hanging fruit. There's lots of projects that need a little bit of a shove. And so I'll get involved in those. And then, we'll scale and as momentum grows. But I'm very, very excited. I had planned on leaving AP Plus towards the end of this year anyway. So this kind of period has been 2 years. I'll see Project Acacia to the end, and I'm transitioning over that period as well. So very, very excited to actually be doing a lot of the things that I've been trying to push from USCOM, from the Network Utilization Committee, but now we'll have the tools and the authority to kind of actually make a big difference.
Well, Rob, I do want to get into a couple things that happened with Hedera kind of bridging over to the TradFi space with what Swarm is coming out with, making assets DeFi ready, or traditional assets DeFi ready, starting with stocks and so forth. And then we just heard about this week Stargate, which is pretty much hooking the Hedera DeFi ecosystem into the liquidity of all the other networks out there. But before we get to that, I know people are going to be curious, and we've talked about it a little bit in the past, but as far as Project Acacia, that's just, the government program and more than a proof of concept, kind of in between. But the concern of the community is, those things, are they actually going to lead to things coming to market? And I know you've talked about in the past that is the goal. That's where you want to go. But without a champion like you, are you confident that that's actually going to take place and we're going to get things coming to market for AP+?
Oh, for sure. So Acacia was always a time-limited reserve bank discovery experiment. There are 14 projects that are live money pilots. So they'll be using real stablecoins or real world asset tokens on public networks. But it's a demonstration of capabilities so that the Reserve Bank can determine, policy and direction and where to support, the Australian digital economy. So there's always an intention that those things get switched off at the end of this year, so for the term. However, the 14 lead entities within Project Acacia are all commercial businesses, mostly, in fact, all of them, and they wouldn't be doing this without a commercial outcome in mind. So even though Acacia will stop, the momentum is there within many of these organizations to continue. And the partnerships have formed over this period, and there is a strong will to actually capitalize, in fact, use it as a kind of an accelerator, as a turbocharge into this next stage. Obviously, we have an entirely different regulatory environment now. And with stablecoins and asset tokenization being the super hot topics of this year, so and they will continue into the future. So the businesses in Acacia all want to find a way to capitalize on that experience, even though the Reserve Bank will not be issuing wholesale CBDCs in the immediate term. I suspect there'll be policy changes and regulation that is informed by the experience this year, and then something will happen beyond that. Now, for AP+, AP+ is owned by the banks, right? And the banks are regulated, and the banks move slower than the rest of the industry and the participants. So I don't envisage an immediate path to production for all of the things that we're doing in Acacia. However, we've not only made these partnerships, but we've also enabled stablecoin issuers like AUDD and a couple of others to issue on Hedera. We've exposed Hedera to many of these partners favorably, where previously they hadn't considered using Hedera. They are now definitely going to be using Hedera. So I think there's a lot of really positive immediate outcomes that will come from that. From an AP Plus perspective, there will be a similar set of considerations coming out of Acacia that then are built into the strategy that will then get implemented over the course of maybe next year. So lots and lots of things to consider. We've got a great team. So me leaving doesn't actually change anything. It might actually speed things up, actually. But that team will carry on into the future and, stay on the governing council and continue to be torchbearers for Hedera and the wider Web3 space too.
All right, good to hear. So on to those other pieces of news that I was talking about. The Swarm thing really hit me like a ton of bricks. It was a real light bulb moment, and I've had a lot of those, well, not a lot, but I've had a few of those around micropayments, around HBAR potentially being low-value transfer mechanism, the currency for things like AI agent-to-agent payments or transactional Internet of Thing payments. But the Swarm thing that I got blindsided with the other day of making things like stocks and pretty much anything DeFi ready, and then probing Philip and asking him, does that mean this is going to be like a walled garden thing? And him saying, no, these are actually going to be bearer assets that you can go and use in DeFi, provide them as liquidity, create liquidity pools and everything else. The light bulb going off, realizing that DeFi could become a direct competitor to, the traditional exchanges out there. The impact of that on Hedera can't be overstated. Then, of course, we had the Stargate news earlier. It's these bridges that are being created, kind of realizing or starting to show and realizing the vision that Lehman initially had. What are your thoughts around these things?
My thoughts are that it's taken a long time, really, to get Hedera into that position. Swarm has been around for years. I've not looked deeply into the Stargate thing, but I do understand and have, prior knowledge that it was happening. So the access to liquidity is everything. Liquidity is lifeblood. And, every network needs that. We honestly believe that Hedera is unique and best placed for so many use cases that will draw that liquidity. But you need the bridges. You need the ability for the value to flow in the right direction. And so that's what that does. Tokenized, we all know that everything of value will be tokenized. It's the mantra that's become a meme. There's so many reasons for that happening, and we're everywhere you look, you see that now. I think Swarm is a great enabler for that, for the Hedera network, and full credit to the foundation team for opening up all these new bridges and gateways and doors into the rest of the Web3 space. For too long, we've been an island, and the island, is now being bridged and integrated with the rest of the Web3 space. So these are great indicators that that's happening and continues to happen, right? The retail team under James Hodgkins and the foundation is really doubling down and continues to impress and break through all of those resistances that were previously there, and it's only for the benefit of Hedera, and not just DeFi. I think the DeFi is clearly the main focus, but once you've got liquidity, once you've got tokenized real world assets, able to be used as collateral in DeFi protocols, that changes everything. And like you say, it's a bit of a light bulb moment when you kind of the neurons connect and you think, that's what happens, right? So yeah, I'm very, very excited about all of that, and the things that I'm going to be focused on over the next couple of years with Heat aren't separate from that. We talk all the time. I've just been speaking to one of our council members on a UseCom call, who was not in the payment space, but actually really interested in liquidity and tokenizing of real world assets and how it all comes together. So these all kind of fit into the same pattern, and the jigsaw puzzle is kind of becoming more and more complete now, and you can see the whole picture.
All right, good to hear. So, Rob, I know you're running a little bit short on time here. Is there anything else you'd like to touch on before we let you go?
No, we've got a table talk next week. So that's Mance's first kind of council table talk for the community. It'll be recorded next week. I'll be going into a lot more detail about the Heat initiative in that. And then I'll be back to take questions, and very happy to come on as often as you need me.
All right. Sounds good, Rob. Well, we appreciate, again, you giving us some time today. Good luck in the new role, and maybe we'll see you next week.
See you soon. Cheers. Bye.
So congratulations to Rob on his new role. Now let's jump into some massive news that hit in the Hedera DeFi space this week. Hedera just crossed a Rubicon with the launch of Wrapped ETH on the network through Stargate Finance. ETH is the first asset, but won't be the last bridged using the Stargate Layer 0 enabled platform. This means Hedera is plugged into Stargate's massive liquidity web of over 80 blockchains. With this new version of Wrapped ETH on Hedera, developers and traders can tap into familiar Ethereum liquidity, but with Hedera's lightning-fast settlement times, ultra-low fees, protection from front-running, and elimination of MEV. Now, barring network fees and gas, there's no cost to bridging using Stargate, providing the perfect onboarding mechanism for degens and devs across Web3 to experience the power of the Hedera network. And I want to make it clear, this really isn't just another token listing. It's Hedera stepping onto the global DeFi stage, opening the doors to massive liquidity, more dApps, and a seamless bridge between Ethereum and other networks and Hedera's next-gen performance. Of course, unsurprisingly, besides Stargate itself, the first place you can interact with and trade the new Wrapped ETH is on the premier Hedera DEX, Saucerswap. Now, I can't wait to have some conversations around this with Brady. I'm sure he's going to have some opinions on the potential liquidity injections around the Stargate platform, but he actually made some news himself this week by providing the HBAR.Guide. HBAR.Guide is a one-stop shop for anyone you want to onboard into the Hedera DeFi ecosystem, covering wallets, HBAR, bridges, staking, DEXs, lending, meme coins, and NFTs. Not only does Brady have a fantastic product in Bonzo Finance, but he takes the time to engage with the community with things like DeFi Corner, and he just keeps adding to the space now with this HBAR.Guide. So Brady, speaking for the community, I want to extend our appreciation to you, and I'm sure there's a lot of support behind you in bringing these things to market, so thank you very much. We also saw a revamp of the data pages for Hgraph. They look amazing, so congrats to their team for this really nice looking upgrade. Oh, and before we move on from DeFi, I do have some relatively bad news. The Hedera DEX Heliswap is going to be sunsetting due to its low volume. There's not much on there now, but what remains needs to be removed by October 30th. So if you do have anything on Heliswap, make sure you take that off and put it on one of the other DEXs within the Hedera space. Now on to an interview that is way overdue, and after talking to the creator, I finally realized the potential, and I'm sure after listening to him, you're going to as well. I'm happy to have today Fossil. He is the founder of Dosa, the creator of Dosa. Fossil, thank you so much for giving us some time today.
No problem at all. Thank you for having me on, mate. It's a pleasure to meet you finally face to face. I know we've spoken a few times in DMs and communicated on the timeline, but it's a pleasure to actually talk to you in person.
Well, it's been too long. You guys have been doing a great job. To kick this off, can you just give us a rundown of what Dosa is?
Yeah, so where do I start? So we started off as basically as a meme coin, obviously launched on Hedera. But like right from the beginning, it wasn't just about launching a coin. It was about building a character, personality, and really a recognizable brand, you know? So the truth about meme coins is the ones that last, the ones that build a brand, because, you know, with meme coins, hype, most come and go, but the ones that survive are the ones that can create a brand that people really, really want to be a part of, you know? So the meme coin came first. So that was what we built for the first, I guess, 4 to 5 months. And then, you know, that was the proof of work. And then the evidence that we could create a brand and deliver top tier content showed that we could then launch a credible service, which is when the studio came about. So essentially Dosa was the proof of work that we could build brands, we could create top tier art, content, and then Dosa Studios is the proof of concept. So we've taken what we've done and everything that was successful with Dosa, and we've packaged it up to provide as a service to the other projects that can tap into. You know, and to really prove that out, we then also launched like our flagship NFT collection, which was 100 Faces of the Demon. I'm not sure whether you've seen those yet, but that was about showing what our artists could do at a high level, you know, and it also gave the community a way to represent the brand. You know, each piece was hand drawn and it tied directly into Dosa's identity, you know, so These didn't have any utility built into them or anything like that. It was about that setting that benchmark, and the quality of art and giving people a piece of Dosa that they could represent on Twitter, So, so obviously we've got the meme coin in the studio, and from that, we somewhat now generating what they call the flywheel, So the memes fuel the studio feeds back into the meme, and then together we've got this sustainable business model.
So why don't we dive into that art a little bit? How did you come up with the idea for this little guy, and how did you develop the art over time?
Yes, that's a really good question. So I've been working with an artist in Web3 for probably 4 years now, just for some, I guess, commission work and a few other bits and pieces that we've done. And from the beginning, we knew Dosa couldn't just be another token, because as I said before, meme coins, they die. If they build on hype, they'll eventually die. So we wanted to build a character and a brand that would, be able to last forever, So, and for me, I love art. And so it just made sense to build a brand around a meme coin, So the way I see it is Dosa's demon. He's supposed to be a troublemaker. He stirs things up, pokes fun, gets under your skin. But the key is like the jokes with the community and never against them. So a part of how we strike that balance is through art and brand itself. The visuals give Dosa a face and a personality, and you can make him menacing or playful depending on the moment. And that flexibility means we can, I guess, push mischief without ever going, I guess, too dark. So the memes, the illustrations, like the storytelling. I mean, that's all part of the brand voice. And Dosa. It makes Dosa feel alive and gives people something to really rally around and identify with. So as it's always been, like Dosa, like the backbone of Dosa was built on art, and I call it an art and branding is the engine, right? The memes, the illustrations, the lore, they all feed into the same thing, creating a character that feels alive, one people can laugh with, share, and use to express themselves. I've said it, many, many times, like Dosa's it's a content machine. And with meme coins, you need, content is king. And that's been our identity since day one.
So how do you strike that balance? So obviously he's a little demon. He is ornery. He gets under people's skin, as you mentioned, but you never seem to go too far. How do you strike that balance?
Yeah, I think, so when we first launched it, there was always that demonic side of the demon that we really had to try and, I guess, separate ourselves from that, because from the start, like a lot of people, to be honest, didn't have any interest in buying the coin. So we were just, when we were creating the lore around the character, we really wanted to lean into the fact that, hey, he's not a demonic. He's not about that kind of stuff. He's about that mischief, the chaotic energy character that is just out there to have fun. And I like to say it always, like everyone has a little bit of, Dosa in themselves, right? Like nobody's perfect. I think we just choose to maybe somewhat hide those imperfections in our life. And Dosa just likes to lean into that and is all about bringing that out into life,
So the next thing I want to touch on is you've mentioned a couple times developing a studio. What do you mean by developing a studio? I haven't heard that term used too much when we're talking about NFTs, when we're talking about meme coins.
Great question. So the studio is essentially a content house, and it's built around, so it's a service. And so essentially we've got creators that are employed by the art house, or Dosa Studios is what we've called it. And it's about, so essentially projects will come to us with their content needs. So whether that would be memes for meme coins, branding, we've got NFT packages, motion teasers, we've got the works. Like we're all about being that one-stop, I guess, shop in a sense for all content required, in Web3. I mean, we've got plans to want to extend past Web3, but for now we're really focusing on what we can do in Web3. So, and I think with Hedera, like I've been on here for a really long time, and don't get me wrong, we've got some really great creators here, but I think we can also level ourselves up. And with Hedera now, obviously, focusing on retail somewhat with the change of leadership at the foundation, I think if we want to be serious about retail adoption as well, we also need to level up our content, and services like this and proven top tier artists as well. Like I think I'm obviously biased, but our art is, it's top tier, and we've proven that through the meme coin that we're top tier creators, and now we want to offer that to other projects.
Yeah, so one of the things that you always want to see in a project is that it's going to be sustainable. And the fact that you're not just getting it from revenue coming from the meme coin or from the NFT, that you have another service that goes along with it is invaluable. So what's the future hold for Dosa?
Yeah, I love that question, because I'm always like, as a founder, you've got to be always thinking ahead. And it's always good to be agile because the space moves so quickly as well, but you've also always got to be planning further and further ahead. So for me, it's about the sustainability of the project, the meme coin and the art house, and then also scaling what we've already built. So in the short term, that means growing those studios is bringing in more artists, signing up more projects, more NFT packages, maybe even retainer style partnerships. So we have that flow on of work that we can rely on every month. And that keeps us active, keeps the artists fed, and it keeps the brand visible. But it's not just about studio as well. We also want to bring those artists directly into the Dosa coin as well ecosystem. So not just having artists coming onto the studio, we want to make sure we're also bringing them onto the coin, because Dosa, as I said earlier, was built on content. And as we scale, we need to be able to keep that creative output flowing. That way, the brand's voice never goes quiet, So projects like 100 Faces of the Demon prove two things: that we can build top tier art that's tied directly to the brand, and two, the community loves having a way to represent themselves. And that's the playbook that we'll keep building on. Scaling creative output while keeping it tied back to Dosa's identity. We're also looking at like cross-chain partnerships for Dosa Studio. So like Hedera is always going to be home, but great art and strong brands resonate everywhere. So it doesn't not just on Hedera, whether that's Web2, whether that's on other blockchains. So we've already started talking with other projects, other people on other chains that open new doors for our artists to bring more visibility back to Dosa.
All right, Fossil. Well, I love what I've seen so far. Do you have anything else you'd like to pass on before we let you go?
Look, I think you probably should pass on a little bit of founders advice while I'm here. I don't usually give it out, but I think if I was to give some advice to a founder out there, it's like, make sure you get immersed in the space for a long time and understand how it moves before diving in straight away. I think there are a lot of mistakes that some founders make is they think it's quite easy to do. And to be honest, I was in Web3 for 5 years before I even thought about, launching a meme coin. So I just thought I'd, leave a little bit of that advice there as well.
Well, I think that's a great note to leave on. I love the success that we've seen so far. I appreciate you building on Hedera, and good luck.
Thank you.
So the front man for Dosa might be a little bit of a bad guy, but the project overall is definitely one of the good ones. But we did suffer a couple rugs this week. The NFT project I covered last week, one of the most successful mints Hedera's had in a while, Bad Birds, rugged. It looks like the founder sold everything possible as fast as he could, shut down his socials, and even tried to claim innocence, attempting to pull what looked like to me to be a double rug. Some of the others on the team and in the community tried to revive the project, but in my opinion, this one's a bit tainted, and it's probably best just to move in a new direction. And it appears that time in the market doesn't really prevent rugs either. The meme coin Ivy, that's been around for a while, appears to have rugged as well. They posted a letter, which was nice, but unfortunately they pulled the liquidity first, which made the open letter ring a bit empty. Now, we've suffered rugs in the past. We've had these two this week. I've heard some grumblings around Space Ape as well, though I don't know if that's a rug or not. I haven't dug into it yet, but I do think it makes sense to define what a rug is, because this may be the latest, but we're going to experience these in the future. And the way that I define a rug is pulling liquidity from a project in an irresponsible way. There's going to be times when either projects just fail or the founder of the project project just has to move away. But we do have to remember that the most successful meme coin in history, Doge, had its founder walk away really early. The community picked it up, and as mentioned, it became the most successful meme coin in history. So how can a founder or a team move away from a project in a responsible way? First, it's letting the community know that you might leave beforehand. Now, that could have a market impact, but you don't sell all of the assets right off the bat. You have a conversation with the community. They may want to continue on with the project. If you do have assets, you need to probably pass on at least some of those to other people that might want to lead the community. Now, you have to try to find trusted people, and that might not be easy, but holding on to it or selling it all yourself doesn't make sense. Now, the founders or the creators, they did start the project, so they might want to hold on to some of the assets, and that's reasonable. But you don't just want to dump all of the assets and then write an open letter or just walk away or something along those lines. You want to try to do it in a reasonable way. Hey, I have an NFT project right now, and I'm one of the ones who have gone out there and bought the NFTs, so I hold a fair amount of those NFTs. If I was going to walk away from the project, maybe I would take 75% of those NFTs that I hold and pass them on to other trusted people in the space that might want to continue with what I was doing. Now, I'm not going to Rug. I'm not going anywhere. I've already been here for 7 years. I'm sure I'm going to be here for another 7. But that's kind of how I look at rugs in general. I think the term rug is thrown around way too much, even though we did experience what looks like 2 pretty clear rugs this week. Now, like I said, we've dealt with plenty of rugs in the past. We're going to continue to deal with rugs in the future, but I do think that the term rug is thrown around a little bit too liberally, but they happen, right? And I think that any creators and founders need to understand how that should be dealt with responsibly if they do have to leave a project. We understand there are life changes. You might have to leave the project, even if right now it's your baby and you never think you're going to leave. There should be kind of a template out there as to how to do that, again, in a responsible way. So that's probably a pretty bad lead in talking about rugs to then talk about my NFT project, but I do enjoy using these NFTs to manage and interact with my community. Now, we only had 1 sale from the mint this week, but we appreciate the support. The Queen is still outstanding, so you could still get this ultra rare. We still have about 95 left in the mint if anybody wants to participate. So if you appreciate my content and you tune in here on a regular basis, this really is the best way to support the channel. And it's not just one-sided. By getting this token, you get early access to my content through my Galaxy-powered token-gated HBAR Bull World. And I'm starting to create exclusive content on there as well. And of course, you get a direct line to me as well. So that's pretty much all I have on that side of things. Let's dive into the HBAR market. Crypto was looking really good a couple days ago, but we took a bit of a dip over the past 24 hours, leaving Bitcoin down 1% on the week and 2% on the day to about $115,000. HBAR is down 2.5% on the week. We'll see if we can reestablish support between 22 and 23 cents again, but overall, I think we're in a good spot. The market is still digesting the Fed rate cut and comments on Wednesday. That said, there's plenty of crypto tailwind, so I'm excited about the months to come. Looking forward to next week. We're going to be doing that space on Monday at 1 p.m. Eastern with the memejob.fun crew. And I'm going to try to get Brady on for that as well, so we can kind of make it a DeFi Corner live. So if you have any questions on Hedera DeFi, that's going to be the space to come to. I'm also going to, of course, be representing Saucerswap on that space. Then Hashport is going to come on for an interview next week. I have a couple other pokers in the fire for other interviews that I'm trying to get done next week, and I'm going to try to get Rob back as well. And then on Thursday at 11 a.m. Eastern, I'm going to be hopping on just like I do every week with the Kabila crew to talk about all the things they have going on. That's pretty much all I have for this week. We'll see you next time.